Thanks for joining us at lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get you the headlines. The Nifty and the Sensex are unable to hold on to morning gains. The indices trade with little change.
Crisis hit Dewan Housing Finance reported a net loss of over 2,000 crore for the quarter ended March 2019. Earnings were unreviewed and unaudited.
Infosys raised its revenue guidance to 8.5 to 10% for FY20, maintained margin outlook.
Wholesale inflation slows to 2.02% in June, while consumer price inflation hits an 8-month high of 3.18%.
And England beat New Zealand in a super over at Lord's to lift the World Cup cricket trophy.
And Djokovic beats Federer in a 5-set thriller to win its 5th Wimbledon title.
All right, let's take a look at how markets are faring. Yatin is here with us.
Afternoon, Ira, and not a great start for the week. We are almost flat on most of the indices, be it the Nifty Bank or Nifty 50. In fact, if you look at the advance decline ratio, also has been weak, suggesting that the market breadth is slightly weaker, especially on the mid-cap side. If you look at the advance decline, clearly on the NSE, we have almost 500 advances for 1,000 declines. So clearly the markets are slightly weaker in trade today. What's doing well is Infosys and Sun Pharma. Infosys, of course, after they raised their guidance, has been doing well. Numbers were largely in line for the IT major for the first quarter. So Infosys remains in focus. Stock is trading near about the day's high. Sun Pharma, after the Morgan Stanley upgrade, is quite active, 3.5% up for that one. Both Sun Pharma and Sun Pharma Advanced are active in trade today on good volumes. UPL and Dr. Reddy are the other gainers as far as the Nifty 50 is concerned. What's not doing well in the marketplace is Indiabulls Housing Finance, Vedanta and L&T. All of these stocks are down anywhere between 1.5% to 4%. Of course, we also have Dewan Housing along with Indiabulls Housing Finance, which is down in trade. In fact, Dewan Housing is down 28%, went down as much as 40% in intraday trade after reporting a weak set of earnings and a lot of unanswered questions. So probably there are a lot of investor concerns there. Vedanta, Tata Steel in the metal pack are looking weak. That there again there is some selling in the metals pack. What's doing well in the mid-cap end of the market is Yes Bank. That stock is up 1%. Dish TV is up 3.5%. And we also have IndusInd Bank, which is quite active in trade, 1.5% down for that one post the quarterly earnings which came on Friday.
Yatin, thank you for that. That's the markets for you. Debt-trapped DHFL, meanwhile, reported a loss of more than 2,000 crore in the fourth quarter. The housing finance company put out its unaudited results on Saturday. Shefali is standing by with the details on this one. Firstly, let's get to the numbers.
Absolutely dismal set of earnings with a loss of about 2,223 crore rupees, and what stood out in the earnings was the provisioning amount and the net loss on fair value to the tune of about 3,280 crore rupees. The only solace for them in the earnings was the deferred tax credit of about 775 crore rupees. Now, out of 3,280 crore rupees, about 3,190 crore rupees was fair value loss on the wholesale loan portfolio, which was about 9% of the total loans to the tune of about 34,000 crore rupees flagged off by them. And in terms of the asset quality, the gross NPA spiked to about 2.74%. The loan book reported was about roughly 90,000 crore rupees, and even the AUM stood at about 1,19,000 crore rupees. So absolutely disastrous sort of earnings put out by DHFL.
But not the numbers. What's in the filings is more significant as far as the story is concerned.
Yes, couple of concerns which have come to the forefront because of the disclosures done by the management itself. And remember, the most important thing is that these numbers are unreviewed, unaudited. So the audited numbers will be put out in next couple of days, July 22, if I remember the date correctly. And as per the disclosures made by the management, they are flagging off that couple of days back they received a letter from NHB, according to which their capital adequacy ratio should be about 10.24% versus about 15.29, which they reported for the period ending March 2018. Now, what could be the reason for lower CAR? Probably divergence in the asset quality, because of which the risk weights assigned should have been higher according to NHB. So we don't know that, and the resulting provisioning as well, that could have been higher. So that should be higher according to the NHB, and hence the lower CAR according to their observations. Other than that, the most important thing that stood out in the notes to accounts was the amount of about 16,487 crore rupees, for which the checks were received. They were entered as receipts, but they were not later banked upon. So these should be seen as stressed loans, as flagged off by IRA in her copy on the website. And if you consider these as stressed loans, then the total NPA amount, that goes up to 21%. So they've just disclosed about 2.74% as gross NPAs. So if we include this 16,000 crore rupees amount, the amount just shoots up. The percentage just goes up to 21%. So that is very significant, considering if you take this on a book of 89,000 crore rupees, so it is a very, very sizable number. Also, the total loans worth about 34,818 crore rupees, just about 9% has been marked down. So this is just management's assessment. So it could be much, the markdown could be much higher. And there are documentation issues as well. For loans about 20,000 crore rupees documents, so there are gaps in documents. So that is another concerning area. And lastly, intercorporate deposits, there was a huge spike in that number to the tune of about 5,600 crore rupees versus just about 610, and documentation issues there as well. So a couple of grey areas as flagged off by the management itself.
All right, Shefali, thanks so much. That's DHFL for you. Let's move on. Infosys raised its revenue forecast for the full financial year, even as higher costs hurt margins in the June quarter. But how does the software exporter stack up against its biggest competition, that's TCS? Agam Vakil is standing by. Agam.
Well, Ira, it certainly has been a very, very good quarter for Infosys, and that's reflecting in the numbers. But in comparison to TCS, let's see how it stacks up when it comes to this particular quarter, and it has done very well. So to start off with your constant currency revenue growth in sequential basis, Infosys has seen a growth of around 2.8%, which is in line. In comparison, TCS was a notch behind at around 2.3%, but that was actually below expectations, which is why I'm giving this point to Infosys. Moving on, let's talk about your guidance. And the big positive here is that while TCS management has indicated double-digit growth for the financial year, it was largely on expected lines. And of course, operating margins is an aspirational 26 to 28%, which they haven't been able to hit, pardon me, over the past few quarters, except for 1 or 2 odd quarters. Infosys, on the other hand, has hiked its constant currency revenue growth rate to around 8.5 to 10% from 7.5 to 9.5%. That also means a possibility of double-digit growth, and they're maintaining the margins, and they have been moving within the margins band that they have subscribed. So, which is why it's another point to Infosys in this case, the score thereby being 0 to TCS, 2 for Infi. Now, as far as your operating margins are concerned, both saw a drop around 90 basis points, both on expected lines. So this is a kind of a draw, and we are also looking at a little bit of a drop when it comes to digital revenues growth. So if you can bring that up as well, as you can see, so this is your digital revenues growth, both growing at 42%, about a third of your revenues now coming for both companies from the digital services business. So that, of course, again, is a draw. However, coming down to the final point when it comes to financial services, which is the biggest vertical, while TCS has seen a decline sequentially, Infosys has seen growth of around a little less than 1%. And this, of course, is again a big positive. Of course, good 31% of the revenues come from this particular vertical for both the companies. Hence, this is yet another point for Infosys. All in all, Infosys has had a stronger quarter in compared to TCS, where the scoreline tells you a picture here. So it's 0 points for TCS, and Infosys, of course, scores 3, and thereby you can say hands down it's a winner for Infosys for this particular quarter.
Agam, they've also changed their capital allocation strategy. That's Infosys?
Yeah, they certainly have. And again, this is also something which is working in favor of Infosys. So, Infosys in the past few years would distribute about 70% of the free cash flows. And they have actually hiked this to as much as 85% cumulatively over a span of the next 5 years. And this, of course, this is of course a positive. Of course, you can't really compare this one to TCS because TCS has a completely different capital allocation policy, and many times it actually stands at over 100% of free cash flows. But this is again a positive feature, and that's also the reason why you're looking at that gain of 6.5% for now in Infosys price.
Akram, thank you. Let's talk about the world of retailing now. Monsoon sales have started early this year and shoppers have to thank the Cricket World Cup for it. Retailers who are already suffering from lower sales saw lesser footfall during India matches. Charlene D'Souza is standing by with some trends.
The 2019 Cricket World Cup had a role to play in pushing up the end of season sale for retailers in June as customers stayed home on weekends to watch matches. Now, retailers and mall developers say that sales were pushed up by almost 8 to 10 days and discounts offered this time were higher than usual. Now, VMart's CMD said that the discounts were higher by around 7 to 8%, while Lifestyle CEO said that like-to-like growth of stores remained flat during the quarter, and also the growth has only been coming in from the addition of new stores. Now, mall developer Infinity Mall CEO said the demand has been weak since the start of 2019 and also did not witness a pickup in May and June, which are traditionally good months for retailers. Now, Edelweiss Research also said in its report that the expansion of stores was the growth driver during the quarter, and same-store sales growth during the quarter remained soft.
All right, the government is reworking its calculation of 51% stake in a company to include its own and other state-run institutions. One of the companies that fit the bill is BEML. The current holding is over 51% and the centre is looking to sell a part of it to a strategic investor. There is also a plan to sell land parcels held by the company, and Chairman D.K. Hota assures that the proceeds will go to the shareholders, not just to the public coffers. Listen in.
The government is looking at divesting in BEML, and this process kicked off in the year 2016. So at that time, the surplus land, which was not required for BEML for the next 5 years, was identified through a very elaborate process. The government was also part of it. Now that land anyway is going to be monetized by DIPAM through a process. Then BEML also, today the government holding in BEML is 54%. Yes. That 54%, the government is going to reduce it by giving 26% to a strategic investor. Yes. So which means the government is going to hold 28%. So BEML will also get disinvested and essentially it will become a private company. That will give us a lot of leverage in terms of ability to take decisions faster. Not that it's slow now, but there are, you have the CAG, you have the CVO, CVC, etc., etc. So I guess it will help us.
Okay, two quick questions on your answer only. The land does, once if it is sold, does any money come to BEML or it goes to the government?
Well, I think, we are a publicly listed company. This land belongs to BEML shareholders, of which government is 54% shareholder. So I think DIPAM and our administrative ministry will have to look at this before they are able to take a call. My sense is that the rule of the country, the law of the land says that the money has to come to the shareholder in some way.
Are people still showing interest?
Absolutely.
And I don't want names exactly because you probably, if you can, it'll be great if you can give me the names. But what kind of people which kind of companies are showing interest here?
No. See, those are all informal. Once the PIM and the EOI is out, it's poured, the expression of interest, then there would be people who would be bidding for it. Then the valuer will have his own way of valuation, and this DIPAM will do it. It's a very specialized thing, very specialized thing. So I would imagine a company like BEML, which has such a huge potential in terms of the growth areas. We are present in defense and we are present in rail and metro. Metro, as you know, we have 50%, 45 to 50% of the entire market share. And it is growing in a big way. In the next 3 to 5 years, we expect at least 20,000 crores of metro business to come. I'm not talking about the rail business. Rail business is something different. So metro is a growth area, defense is a growth area, mining is a steady area for us. So if you look at all the three verticals, I think there's huge potential and upside. Therefore, I think people would be interested.
Management of BEML. Mammi Group, meanwhile, has picked investment bankers to manage the sale of its cement unit. Remember, the group is looking to sell stake in several businesses to pay down its debt. PR Sanjay of Bloomberg News now joins us with more details on this one. Sanjay.
So it's a sale time at Mammi Group. Mammi is not just selling cement, but it's also selling paper business, real estate, hospitals, etc. Series of sale is going to set to happen. So what we understand after picking up Nomura for their Mammi paper sale, and then they've finally they are very much in advanced stage to hire Credit Suisse and Upward to sell their cement business, and they're expecting around 1 billion valuation. This is not, however, they're talking to many investment bankers, so it's not finalized, but the front runners in this deal is going to be Upward and Credit Suisse, and it could be a complex deal. There could be other involvement as well. At this point of time, management is not disclosing too much of details, but what we pick up from the from our sources and management representatives are these two bankers are in lead runners, front runners for this deal.
Do we know how much they're exiting? Is it a complete exit?
So it is not that it could be a part sale, part stake deal, or it could be they can go for a complete exit. So this decision, this critical call will be taken by Credit Suisse and Upward in coming days.
Sanjay, thanks so much for that. Let's move on to macro news. Wholesale price inflation eased to just over 2%, even as retail inflation had risen to an 8-month high in June. What's causing the divergent trend? Pallavi Nahata has the fine print.
Wholesale inflation rose by 2.02% annually for June compared to the Bloomberg estimate of 2.25%. The data was put out by the Commerce Ministry today and showed slower wholesale price growth in both primary articles and manufactured products compared to the previous month. Primary articles grew by 6.7% in June compared to 6.2% in May. Manufactured products rose by 0.9% in June, moderating from 1.2% in May. Data for retail inflation in June was released on Friday. Retail inflation rose to an 8-month high led by higher food prices, particularly in urban areas. It rose to 3.2% in June from 3.05% in May. A Bloomberg poll of economists had estimated inflation at 3.1% for June. Retail prices in food and beverages rose to a 12-month high of 2.37%, driven by pulses and meat products. The pace of growth of urban food prices continues to outstrip growth in rural food prices. The divergence was steepest for fruits and vegetables. Despite the consistent pickup in retail inflation, it remains well below the Monetary Policy Committee's target of 4%. With the government staying away from direct fiscal stimulus, the MPC can now look at more rate cuts. IIP figures for May were also released on Friday and showed a moderation to 3.1% compared to a revised growth rate of 4.3% in April. While growth in manufacturing and mining moderated, it saw a modest increase in electricity generation. Industrial output, as classified by the end use of goods, fell across all verticals except consumer non-durables and infrastructure.
Right, the other thing that stands out in the inflation data is the complete collapse of core inflation, wholesale core inflation below 1%, retail core inflation also falling. Upasana Bhardwaj, senior economist at Kotak Mahindra Bank, joining us on the phone line. Upasana, can I ask you for your thoughts firstly on this core inflation thing? You know, you've been pointing out how sticky it was. What do you read into the fact that both the retail numbers and the wholesale numbers are now showing a very significant fall in core inflation?
Yes, absolutely. Couple of two. One is commodity prices remain spread, and along with that, of course, it is the demand side pressures which also remain muted. So all in all, it has been. I mean, we are seeing that kind of a trend happening over a period of time, and this is just reinforcing the muted demand conditions that we are seeing at this point in time. Even in the retail inflation, we've seen in the last few months that core inflation has come down significantly. And that is, again, largely reflecting the sharp impact of the slowdown, the economic slowdown and the demand conditions that remain very weak. So, yes, I think the clear split that we are expecting to see in the upcoming readings as well is that core inflation should remain slightly muted, while food inflation should continue to, trend slightly higher. are expecting that kind of a mean reversion to happen because last year was really difficult trajectory that we saw for food inflation. So disinflation is likely to, of course, it has gone. It's a thing of the past now, and we are expecting that food inflation should continue to move up. But some mix of the two will be enough to keep the headline inflation well under control, and that is something which I think the Monetary Policy Committee will draw inferences from.
Upasana, just another question on core. So if one looks at again the disaggregated components of core, where is the pressure coming in from? Is it mostly manufactured goods, or are services also starting to see a pace of sort of disinflation?
Actually, if you see, it is across the board. So the base metals, the wood, all categories. So it is actually seen across the segments, if you see. So I would want to believe that it is generally the global economic slowdown which is weighing on manufactured goods. So I think it's across the board, I would say.
Okay, Upasana, just a couple of comments on where this leaves policy. I know you alluded to it, but this mix is probably a better mix for the MPC. People are still penciling in at least another 25 basis points, most likely, or perhaps at least in August.
Yes, absolutely. I think it is far better a mix than what we were seeing until a couple of months back. A food disinflation is not something which we can live with for too long, and that is why I think now that we have normalization of food prices and core inflation remaining fairly benign, this gives the Monetary Policy Committee, a good case for going ahead with monetary accommodation. So yes, we are looking at 25 basis of a rate cut at this point in time, and cannot completely rule out further accommodation beyond that, depending on how really the growth inflation dynamics really pans out.
All right, Upasana, we'll leave it at that for now. Thanks so much for taking the time to explain.
That's the inflation dynamic. Let's also talk about China now. China's economy is slow to its slowest pace since the country started compiling its quarterly growth data in 1992. The Asian country's GDP grew at 6.2% in April to June of this year, as the ongoing trade war with the US has taken some toll. But some domestic indicators reported a sharp rise. Bloomberg News' James Mega reports.
The growth China's growth is slowing down, but that's to be expected. The economy is moving from a very high growth period as it moves into the middle income, and so you would expect that overall GDP growth is going to slow. The really surprising things we're seeing is the unexpected strength in industrial production and retail sales. They were much better than expected, and that's especially surprising for industrial production when exports have been so weak, partly to do with the trade war with the US. So the GDP numbers in and of itself, is not really a good or a bad sign, but the stabilization of industrial production and retail sales indicates that the domestic economy is actually a lot stronger than people have thought, which bodes well for the economy going forward. If that strength continues, there is some indications of that. There may be some dark clouds on the horizon. One of the reasons for retail sales picking up a lot was car sales in June, when that was actually buoyed by a lot of discounts as car manufacturers try to get stock off their lot as they move into it. So because they're selling now more energy efficient vehicles, so there may be a pullback in retail sales in July. But overall, it was a pretty good picture for the domestic economy, at least.
Protests continued in Hong Kong over the weekend, where the police arrested dozens of people from the busiest districts of the island. The latest round of protests come amidst reports that China has rejected chief executive's offer to resign. Dan Tenkate of Bloomberg News brings us more.
The protesters have been keeping up the momentum quite well. They've got tens of thousands yesterday in a suburban area of Hong Kong, and they've been, trying to mix things up with the protests. They're not occupying one location, but they're going around to different vicinities all over Hong Kong each weekend and managing to get very sizable crowds. They tended to kind of end in violence, little scraps every night, and we saw that again last night. Two policemen had their fingers bitten off, which was some gory scenes over there. But generally, these sorts of clashes have happened. They've died down. They sort of settle for the week, and then protesters are right back out there the following weekend, still attracting sizable crowds.
ISRO has called off its moon mission less than an hour before its scheduled launch from Sriharikota. The Chandrayaan-2 mission was aimed at landing near the moon's south pole, a first ever for all lunar missions. ISRO said a technical snag had been detected in the mission and hence it was aborted.
From sports, Sunday could not have gotten any better, be it the Cricket World Cup or Wimbledon. Let's start with England's breaking its 44-year-old jinx, lifting the ICC World Cup, but it went down to the wire, and how. The two teams were tied at 241 at the end of the respective 50 overs, leading to the super over format, where New Zealand managed to score exactly the same as England. The hosts were declared winners since they hit more boundaries in the match. Ben Stokes was the man of the match for his all-round efforts, both during the innings as well as the super over. New Zealand captain Kane Williamson was the player of the tournament. And 10 miles away, the world's best tennis players were locked in a battle for 5 hours. Novak Djokovic retained the Wimbledon trophy, beating Federer in a tiebreaker 7-6, 1-6, 7-6, 4-6 and 13-12. The Serbian has now won the title 5 times and was playing in front of a predominantly Federer fans. It's Djokovic's 16th Grand Slam title.
And that's a wrap on this edition of Power Lunch. Thanks for watching.
Thanks for watching.